All right, hope everyone's doing well. I've decided I'm going to begin to show I'm going to show my trades, and my end goal is that it helps in some way, shape, or form. As long as it helps and it doesn't compromise what I'm doing, I'm happy to do it. If I find it too concerning for myself or that it affects me too much, I'm going to stop. If I find that it doesn't help anybody, I'm going to stop. But at this moment, let's just see what happens. So, unfortunately, if somebody can help me, please do. I cannot figure out how to not show the position size that I'm trading for the micros. This is my first day of trading the micros, and all in all, it went well. I didn't have any issues getting filled. Very happy about that, and I'll continue to be trading it quite a bit. But with that said, I could get the dots. Let me show you. The problem is every one of these black circles is currently my position size, and I really do not want to show that, because for me that's just, I don't know, that's just too much information. I'm happy to share everything else. So anyways, this is the best way I could share it, and hopefully this helps. So for overall, let me just start with that. Gap up, odds are you're going to touch the moving average, maybe get a spike in channel. Pretty similar to Monday. Well, kind of. Strong rally. So in essence, we kind of gapped up. Sharp sell-off. Only difference, trading range. Let me first go over my trades. So, first trade was actually in the Globex session. I wanted to just test the waters and make sure my commission structure was working and there wasn't any issues on my end before I actually started trading. So basically I sold at some place, got out for a 1 tick profit just to see, okay, did my commission structure, was that what I intended, and was that what I planned on, and how was the order entry. By the way, I used all stop entries, limit orders, had no trouble getting filled. So that's good. So first trade, that's just Globex session, wouldn't count it. Second trade, I actually ended up selling this close. I was confident we would at least test a little bit lower. I was at least confident we'd test down to here. In hindsight, not a great trade, too much risk sideways. When we got that doji, I just ended up getting out for a small profit here. And by the way, the red means I shorted, the purple means I took profits or bought back the short. So red, sold, took profits. The green means I bought, purple means I sold out long. So bought, sold, bought, sold, bought, sold, bought, took profits. Anyways, second trade was here. In hindsight, should have bought here, wedge bottom, you call it a triangle, moving average. I was a little hesitant and it raced up quickly, so I just waited for the close. Ended up buying, had a measured move from this low to this low, so I had a target up here. When we got that tail, I was disappointed. I set a limit order to get out at the high of the bar, didn't get filled, and at that point I just exited as the bar turned down. Bought here. Hindsight, I should have held, however I was nervous. I thought the odds were 99% chance we were going to touch the moving average soon. So I really don't like buying on a gap up, hadn't touched the moving average, and we're just so close to it. So I just quickly got out at break even. Same thing here. I actually ended up buying above the bar. Stopped down here. But again, we had a wedge top. I was confident we'd get a second leg up. So in hindsight, maybe I should have held. However, I really didn't like the fact that we hadn't touched the moving average. It's just something, I don't like these kind of days. I want to touch the moving average during the day. So, over here, it's kind of like, it's like right here. I don't want to sell down here. I want to touch the moving average. So I naturally look for the counter trend trade to the moving average. We've had a lot of gaps recently. So here, I don't like buying. I want to sell. I want to get to the moving average. Same thing here. I don't want to sell. I want to get to the moving average. Same thing here. I really don't like buying. I want to sell and get to the moving average. So anyways, here, ended up buying above the bar. One thing I really didn't, end to end, I bought, got out of break even, as it went out, as it formed two dojis. My reasoning was bars are really small, so it's basically a triangle. And I was really disappointed by the fact that, number one, we hadn't touched the moving average, so I thought at least 50-50 chance I'm wrong, and we do fall to the moving average. I had a stop down here. However, my logic was, okay, if there's a 50-50 chance that we're going to fall below the bar and touch the moving average at least, and maybe higher, that means there's a 50-50 chance I can get out and buy, a few points lower. So I got out and ended up setting a limit order at this low, got filled, and whenever this bar closed on its high right here, you can see set a limit order. Whenever that bar closed on its high, I actually ended up buying more above the bar and put a stop a few ticks below. Reasoning was always when bears would sell, they'd give the market a few legs down, as would the bulls. But if the bears got outside down, they needed follow through. If they fail to get their follow through, bears are going to buy back shorts and bulls are going to buy. I originally had a target up here, a few ticks shy of 2,800, which was like, which of course we ended up reaching at the end of the day. So I had it a few ticks shy. My hope was, we'd get something like this. So I had it somewhere up there. I ended up getting out at the close of that bar. I wanted to see a fast move up. I was confident we'd get up to here, especially when we got these bars, but when we got that, I just got out. I debated, I would have sold if it closed on its low, but it didn't. And that was all I did. What else would I have done? I might have bought above here, but I don't know. I was happy with what I did for the day, so I just let it be. Overall, these kind of days are very they're deceiving. I say that because look at the daily chart. You look at that and you say, wow, what a relentless trend. But then you look at the day and you say, wow, what a crummy day. It's kind of like saying, okay, I'm going to sell up here. Well, the problem, and again, I wanted the whole time, for the first 2.5 hours of the day, I really wanted to sell to the moving average. But I don't want to sell here because we're even at 10:30. Because here's the problem with selling 10:30. I don't want to sell after these bull bars. And maybe in hindsight, I should have said, I need to get long, I don't want to sell, but I don't know. I try not to be too hard on myself with that. These days are pretty, far and few between where we get these big gaps and just go up. So, I don't know. I try not to, I just, my one thought was, okay, if I just look to buy at the moving average, I'm probably not going to lose any money, or at least do anything dumb. So that's kind of my goal. But looking back, I should have bought above there, put a stop down here. I should have bought, I should have bought this close and held for a second leg, but I don't know, maybe I would have gotten out below that bar. So not really great trading. So yeah, overall, about some other markets, well, Apple. Big outside down bar, $8 plus. Huge sell-off, but climactic. So trend line break, retest, micro double bottom. You can call it a double bottom, higher low major trend reversal, strong rally. Whenever you see this, you always have to be aware the risk is massive. So if you think about it like this, do I really think Apple's going to go from here to, $166? Probably not. So a lot of traders will see that as value. So on the daily chart, you see this. Channeling down for some time, broke below these lows, strong rally. And by the way, this is kind of the similar concept when you get outside down days. So if you kind of just pretend this is the low of the prior day, and pretend this is the high and this is today. Sometimes you'll go above the high of the day and you'll come right to an obvious support, such as the bottom of the channel, or in our hypothetical situation, the low of the prior day, and you'll come really close to it and just bounce up sharply. In that case, better to get out. For always in, this kind of stuff, I think this is stronger. I like this more than the Emini today. So let me look at that for a second, and I'll show you why. So my problem here, this was strong, but when you look at Apple, that just seems much, much stronger. Now, so I don't know. At the end of the day, looking back, should have been a little more aggressive buying these closes. But my problem was just the bodies weren't impressive. We weren't above these highs. We got a small body here, big tail here. When I go to Apple, 3 consecutive bull bars, a bigger bull bar, follow through bar, far above the open of the day. Here on the E-mini, we just didn't do that. A few bars up, barely above the open of the day, close the gap. So anyways, always in today. I would not buy above bar 1. 80% chance will fall below bar 1 just like every other day. 20% chance it is the high. Probably not. Even though I did, not really great sell. First always in trade above 915. Bears get out. A few ticks below this bar or below 940. I'm sorry, bulls get out. I would not sell. Bulls get long again above 10 o'clock. Stop down at here. Probably get out maybe below 11 o'clock or below 11:05. Then they get long. They can get long 11:20, but not great. Probably 2 legs down. It's a wedge. 1, 2, 3, and 1, 2, 3. So it's nested. Bulls probably buy above here. Maybe stop a few ticks below the low. Strong rally. I'd get out below that bar, especially if I didn't get out there. I'd definitely get out there. Bulls probably buy again. Do like that, a little easier to see. Bulls buy again above this bar. Maybe they get out below here, but really not that great trading, tight trading range. 2 legs up, I'd get out below the bear bar. You can buy here, but again, I don't know. You're buying in a tight trading range. It's in the middle of a tight trading range, so I just wouldn't be inclined to do anything here. 3 pushes down, better to buy here, but again, still a very tight trading range. No reason to sell, so I guess if I do anything, you're long. Maybe you get out below that bar. I probably would not. Yeah, you probably buy above this bar. If not, you wait for a high 2, but really not all that clear. Maybe you buy here, and you got the end of the day. So, not much to say with that day. And by the way, just to kind of a side topic in relations to trading, I'm not a big fan of, and I could be completely wrong, but so far I think I've been right. I'm not a big fan of psychology, but I like psychology, don't get me wrong. If you're reading, I just don't think psychology books on trading are really going to help you. And for some, maybe they do. But at the end of the day, I've always been a big proponent in the more that you understand, the more that I read of Al's books, or the more that I study in Al's videos or his webinars, the more I study of what he does, the better I'm going to be. So the more that I understand, okay, what's the tendencies on the gap up, the more that I say, okay, it's actually, it's really only 20% chance we get an opening reversal down. It's really, if we're going to get a trend, it's probably up, most likely sideways to the moving average. Then what am I going to be more hesitant to do? I'm going to be less hesitant to buy above. I'm going to be less hesitant to just sell aggressively. And I'm going to say, okay, maybe I should wait for the moving average. So like over here, strong spike, talked about it yesterday. Well, if I look, strong spike, but we're not above these highs, it might be a trading range. Maybe it's a bull trend. Bulls will buy knowing either it's a bull trend, spike and channel, or a bull leg in a trading range. If it's a bull leg in a trading range, they'll be quick to get out. And, if I study Al's book, I say, that bull bar's a lot smaller than the bear bar. This may be a surprise, small second leg down. We have our second leg, 3 consecutive bull bars, probably not a great buy. Might be sellers above, and bad follow-throughs. Some bulls will just, if they bought, will be quick to get out. Bulls aren't getting what they need, maybe a measuring gap, and we're selling off, but I don't want to buy. Tight channel, first up will fail. Tight channel, first up probably will fail. Double bottom, reasonable to buy. 3 consecutive bull bars, not really a great sell. Possibly buyers below, probably buyers below. Big bull bar close in the middle, so probably sellers somewhere in here. Better to get out of shorts or get out of longs. Big bear bar, I don't want to sell. Bottom of a trading range, probably buyers somewhere. Big bull bar, big risk. Some bulls would rather buy. Voice getting a little hoarse. Bulls would rather buy a 50% pullback. So, anyways, you get the whole point. The point is, if you want to get less stressed trading, you got to take a lot of trades and you got to learn. I'm not a big proponent of sitting around and seeing, and meditating with trading. I hear all the time, I see people talk about all the time about you got to be one with the market and flow with the market, but I don't even know what that really means. And again, maybe I'm missing something entirely. I don't know how to flow with the market. Now I get and again, I'm kind of giving these people, maybe I'm being unfair to them. I get what they're implying. What they're implying is you can't be stressed out all the time. But what I'm implying is the only way you stop being stressed out is if you understand what you're doing. It's kind of like anything. Most people remember learning to drive a car, and the first time they did it, they were freaked out. I remember the first time I drove a car, I was freaked out. However, now that I've done it for almost 10 years at this point, if any of y'all don't know, that means I'm 25, then now it doesn't bother me. I don't think anything about it when I get in my car because I've had experience with doing it so much. Well, the more you trade, the more you learn. So what I would challenge y'all to do is, rather than pick up that book about market wizards, which I have the book. I've read most of the book. I've read the trading tutor or the turtles, the people that taught, the whoever the person was that taught some random person how to trade, blah, 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 or the theory that anyone can learn how to trade. All that stuff's great. Jesse Livermore, great book. It's a interesting book. Did I learn anything from it? Not really. Everybody knows the whole saying, let your winners run and cut your losses. But again, what does that really mean? So, with all that said, most of y'all have plenty of information on trading psychology. Y'all do. What I would challenge y'all to do is to start learning. And let me rephrase that. Everybody's learning. That's not the right thing to say. What I would challenge y'all to do is to, next time before you pick up that psychology book, read another chapter in Al's book. Sometimes my greatest realizations with trading were on days where I lost money or I had a terrible trading day. Or, I remember so many days, and they eventually go away. You start to, if I have a bad day now, I kind of go, well, that was stupid, I would say, that was dumb. You sold the close of this bar. Why would you sell in a tight channel when it's probably minor and it's got to go sideways, But however, beforehand, maybe I would say, oh my gosh, we had a lot of gaps. Of course that was a bad sell. I would have that realization. So what I would challenge you to do is on your days where you screw up or you do bad, remember, I think that most people kind of have a turning point with trading when they start to look everything from the perspective of, okay, what can I learn from right here? There's always something to learn from what you did. And if you're open to it, And sometimes you might have such a bad day with trading that you can't think clearly. The amount of times, probably more times than good days at this point, or, at some point, the amount of days I had where I said, I'd look at everything. I remember I'd have, a couple weeks of being profitable, and then all of a sudden I just couldn't have one winning day, and everything went to crap. And I'm thinking to myself, how in the crap am I going to do this? Those moments were always at the end of it. At the end of it, my voice getting a little hoarse, so I've got to stop in a minute. But at the end of it, there was always something big I learned that kind of changed everything. For me, one of the biggest things I've learned is I understand always in rather well. When I deviate from always in, I don't do as well. So when I'm more of, okay, when I try to be a little too aggressive, sometimes I find myself on the wrong side. So anyways, it takes a long time. I've been doing this since 2012, June of 2012, actually a little before that, but I'll just say June of 2012 because I just went with it. So that is 2019. Granted, I started trading every day in 2014 of June, so 2 years later. But I spent a fair amount of time, really all through college actually, studying, learning how to trade, planning classes outside of trading. And every year that went by, I started studying it more and more and more aggressively. So this is not a game that is going to, I don't know. I see trading as kind of like playing in the NFL or any sport. If you want to play a major league sport, it's going to take a while. All those major league athletes didn't decide in college that they wanted to play in the MLB or NBA. So anyways, kind of going on a tangent. If there's one thing I could sum up from that, I would say study. If you don't know what to study, pick a random video, pick a random chapter in Al's book, and just roll with it. And should you study the books more than the videos? Well, the videos, you'll learn faster with the videos. However, the books have a lot of examples. So I still read the books. They're great books. They're great books. And I'm talking about the three. If you don't know the books, I'm not going to explain it. Go to the Brooks Price Action website and go from there. So anyways, that's all I got. Thanks for watching.